The coronavirus has emptied out our cities. Billions of people are staying at home, and just a few are driving their cars. Planes are grounded, and factories are idle. The world is burning less oil, but the world's major producers have been pumping more than ever. As a result, the price of oil is falling down, and since there is no demand, oil storages are filled up. Moreover, some oil is stashed at sea on ships. As the US production flooded the market, Saudi Arabia and Russia decided to produce less and prop up oil prices. But they couldn't come to terms on a new cut and started the price war against each other. Meanwhile, the US producers continued to pump although prices are tanking, and hits a record of more than 13 million barrels per day. But why they kept producing? Good question. The Texan oil is hard to extract, unlike the other countries. The US oil companies borrowed heavily and built pipelines to drill wells, therefore they can't stop their production seeking profits. And recently, OPEC members have decided to reduce their output by 10 million barrels a day. So far, the market didn't react at all, because analysts say that we have a surplus of 30 million barrels a day. So even if we reduce the production by 10, we still have 20 million barrels overproduced. This is why the oil prices kept going down. So now we understand the global situation, let's dive into the American oil market and see how the contract plunged into negative territory and how. So, in the oil market, besides sellers and buyers, we find intermediaries. These intermediaries only buy and resell a contract at the most profitable price. They do not have storage units or the technical tools necessary to maintain the goods in case it does not find a buyer. So they only hold the contract at a price set today for delivery on a specified future date. This is why we call them futures contract. I'll give you an example. As a broker, I'll buy a contract at today's price for a multiple of 1,000 barrels. Each contract has an expiration date. So, my goal as a broker is to hold that contract and sell it before it expires at a higher price, expecting to make some margin. However, the 21st April was the expiry date of May contracts. So in the US, oil deposits were already mostly saturated due to the overproduction we had. Therefore, brokers were offering to resell their contracts with a bonus to get rid of merchandise that they could not store anyway. The West Texas Intermediate crude for May contract fell more than 100% to settle at a negative $37 per barrel. Oil traders have never seen such an insane market like this. Especially during these bad times, the markets remain uncertain and unstable.